Chapter 11.2, Accounting for Sales Returns and Allowances Using a General Journal. So in this lesson, we're going to talk about what happens when people return stuff to us that we originally sold on account, as well as what happens if we accidentally debit the wrong accounts receivable account and have to make a change. So in the first transaction, June 2nd, we granted credit to Title Industries for merchandise return, $253 plus sales tax of $15.18 from S45 for a total of $268.18, credit memorandum 601. So we're going to use three different accounts here. Obviously, the first account that we're going to use is going to be our sales return and allowances. The next account that we're going to use is going to be a sales tax payable, and our next account that we're going to use is the accounts receivable Title Industries. So what a sales return and allowance is that's a contra sales account. It is designed to lower the book value of the sales account. It also allows us to be able to tell how much stuff was returned throughout the given fiscal period, and if it's up or down as compared to other years. So it's a good little storytelling agent in regards to our sales. Sales tax payable, same as before, it's that liability account, and accounts receivable Title Industries is the same as well. So in this case, what we're going to do is the sales return. So the total price of the sale was $253. That was the original price of the sale, so we're going to debit that. And again, we're debiting that sales returns and allowances because that is designed to lower the book value of sales. Going back to my example of book value, if you have an A in a class and you get a C on a test, your grade in the grade book might still be an A, but you know that your book value is going to be much lower than that because of your current test score that you have. So again, that's sales return allowance. It's a debit account. So then next we need to lower the liability that we owe Uncle Sam for sales tax. So we're going to debit the accounts payable $15.18. Again, accounts payables are a liability account. They increase with a credit because they sit on the right-hand side of the account equation. They will decrease with a debit because they sit on the left-hand, because they'll decrease with a debit, rather. And then finally, the total amount that Title Industries owes us is actually been decreased. And because it's been decreased, we are going to credit the accounts receivable Title Industries asset account. So we will lower it since assets sit on the left-hand side of the accounting equation. There's a debit is an increase, a credit will be a decrease because they don't owe us as much because they have returned us that stuff. So now all we do is we just go to the general journal and we fill this out. So we take June 2nd, which is the date of this transaction. We start with my first debit, which is sales returns and allowances. So it's $253. We then take sales tax payable in our next debit, and that's a debit of $15.18. Then we take our accounts receivable / Title Industries, and that's $26.18. So a couple things that you want to make sure that you do. You want to make sure that you do put that slash and that post reference. That reminds us that we need to post this $268.18 into two separate accounts. And those two separate accounts are the accounts receivable controlling ledger and the Title Industries accounts receivable subsidiary ledger. Then don't forget to also put our credit memorandum 601. So that's how you journalize that transaction. If you're looking for how to post that, I do have another video on how to post items from a general journal. Next situation that we'll see in this lesson is what happens if we accidentally, actually I'm ahead of myself, rather we granted credit to Johnson School for damaged merchandise, $149.25, sales invoice 48, credit memorandum 603. So again, we use our same accounts, sales return allowances, sales tax payable, accounts receivable Johnson Schools. In this situation, the sale was $149.25. Now remember, Johnson schools and churches and nonprofits, they do not pay sales tax. They are tax exempt. And since you're tax exempt, you're not going to do anything with the sales tax account and sales tax payable in this account. And it's actually a pretty easy, straight up transaction where you're going to debit the sales return and allowances and credit the accounts receivable Johnson schools. And so we follow our transactions just like so. And again, don't forget this slash mark here because that slash mark will tell us to post to the controlling and the subsidiary accounts receivable ledgers, respectively. Finally, moving to the last one, as I was started to describe earlier, is we discovered a sale on account to Mark Ford on July 5th that was incorrectly charged to the account of Andrew Ford. Could happen, $253.37, memorandum M37. So again, we have our accounts receivable ledger of Mark Ford, and we are going to mark Ford, and we have our accounts receivable ledger of Andrew Ford. As you look, if we were to look in those balances right now, you would see that the Andrew Ford has a balance that he owes us $253.32. Well, we need to right the wrong. So basically, we need to subtract that 253 out of the Andrew Ford and put it into the Mark Ford. How do we do that? By debiting Mark Ford and crediting Andrew Ford. This credit down here of the 253.32 will actually make the Andrew Ford balance 0. The debit up here will make the Mark Ford have a balance of 253. And it's very simple how we do it. We actually don't need to use the account. We're just going to stay within the accounts receivable subsidiary ledgers. So we don't need to put the accounts receivable / Mark Ford, because that is not impacted. Rather, it's the subsidiary ledgers that are impacted. But we are going to then put Mark Ford as a debit for 253.32, and then the Andrew Ford 253.32. And again, we are not using accounts receivable / Mark Ford and accounts receivable / Andrew Ford, because the accounts receivable controlling account does not change. That's not where the error is. The error is in the subsidiary accounts receivable ledger of Andrew Ford and the subsidiary accounts receivable ledger of Mark Ford. Therefore, we don't need to we can just put Mark Ford and Andrew Ford on there. So then how do you post them? Just a quick little review. You're just going to deal with your Mark Ford accounts receivable subsidiary ledger. The date of this transaction was the 14th. The came from G7, General Journal page 7. It's a debit, so now a debit balance and a debit entry. It's now going to have a debit. It's going to be an addition, and then they're the same. We find the sum, and then your post reference will be 146. Again, further video. I have other videos that explain this in more detail. I'm going very high level on this. Andrew Ford, again, new transaction on the 14th of G17. It's a credit of 253.32. He had a debit balance of 381.32 with a credit entry. That's a subtraction. Again, remember, if you remember back to the transaction, we are taking this out of Andrew Ford and putting it into Mark Ford. So it's back down to that 128 balance that it originally was on July 1 because we made the error, and we're there. And that is how you do that. Hope this helps. If it does, press like. If you really liked it, press subscribe, and we'll see you in class.